Good morning, everyone. Hope you're all doing well. It is Tuesday, November 28th, 9 a.m. Eastern Time. Hope everyone is ready for this market after a slow-moving start to the week. We had fairly low volume, and we had a decent little range that played out throughout pretty much all day yesterday, putting some downside pressure in the market now here pre-market. So let's discuss some of the news that we saw shape up over the last 24 hours, and then we'll dive into what you see in front of the screen here in terms of trade plans for the S&P 500 futures and the expected movement. First things first, right, we'll talk about the consumer and Apple, right? Or sorry, not Apple, mistake. The consumer and Amazon, right? They've not only helped the American economy rebound with a vengeance, it would seem, right? Things are much prettier on the surface than they are in the depths of the internals, we should say. So they've also shaped up the winners and losers of the sprawling U.S. logistics industry. New internal data from Amazon reportedly shows that the e-commerce behemoth is set to take hold of the annual delivery crown for the first time, shipping a total of 4.8 billion packages in the U.S. before Black Friday and Cyber Monday, and predicting it will deliver about 5.9 billion by the end of 2023. Its closest rival, UPS, only handed out about 3.4 billion parcels domestically in the first 9 months of the year, and said that its volume in 2023 is unlikely to exceed 5.3 billion. Right, so Amazon's expected 5.9 billion by the end of the year certainly outweighs that. FedEx's domestic parcel volume is even further behind, and both companies even include packages they hand off to the U.S. Postal Service for the final delivery. So it wasn't that long ago that the logistic leaders thought the idea of a serious Amazon competitor was more of a pipe dream. In 2016, FedEx CEO Fred Smith even called the idea fantastical, saying that concerns about industry disruption were overblown. In all likelihood, the primary deliverers of e-commerce shipments for the foreseeable future will be UPS, the U.S. Postal Service, and FedEx, he declared in a conference call with Analysis. About 3 years later, in 2019, FedEx and Amazon went through a very public divorce as the latter continued to scale its business and invest in its own delivery service. Amazon still works with UPS, but it only constitutes a minority of its operations, or about 11% of the revenue, helping Amazon take the lead were a number of innovations, including flex delivers, same-day delivery centers, warehouse robots, and more recently, AI. Walmart and Target are also speeding up deliveries by fulfilling orders closer to consumers, but its store-less format, Amazon has been nimble to remain a clear industry leader. While Amazon has shown its power in residential delivery, its core strength is anchored in a one-way operations and its existing network, and that may already be changing as it expands its global reach and leverages other providers to deliver the same level of services or things like pickup returns. Earlier fears of big cancellation in Prime memberships due to the price hikes have been proven wrong. Many analysts have looked at this, and Amazon subscription business is showing steady growth, and the launch of new services also increasing growth runway for the subscription business. We also have some OPEC news as well as some kind of IPO news. I don't know if you guys are too familiar with the fast fashion Chinese company or Chinese giant, right? Shein is confidentially filing for a U.S. IPO, targeting a valuation between 80 and 90 billion dollars. Which would make it its biggest U.S. listing by a Chinese-founded company. So Shein has steadily grown to become the world's largest fashion retailer thanks to its real-time retail business model, under which suppliers have 3 days to produce new designs or or they have the risk of being cut off. However, Shein has come under fire for alleged worker exploitation, which could bar its IPO if found true. For the time being, investors should continue to collect some more information about this promising but potentially very complicated listing. Realistically, right, I know very little about Shein, that they have very, very cheap items. I don't necessarily know what the quality is on said cheap items, but fast fashion is something that I guess consumerism is very fond of. Not necessarily something for me, but would be interesting to see how this thing IPOs because it's growing very, very aggressively. Now, for the final piece of information here, before we take a look at some of the other news that's set to come out along with the S&P 500 breakdown, OPEC, right? OPEC drama, crude prices have now fallen for 5 straight weeks, making oil's longest losing weekly losing streak since 2021, but that could change as traders weigh the odds of further production cuts by OPEC Plus at the group's meeting on Thursday. Saudi Arabia reportedly asked OPEC Plus members to reduce their oil production quotas in a bid to boost global markets, but some members have resisted. The Saudis, who have been making a largely unilateral 1 billion barrels per day supply cuts since July, are now seeking further support from the cartel and its partners. So there are analyst expectations of OPEC Plus to announce coordinated cuts, saying it's needed to aid sentiment and amid weakening demand, which could help boost prices in oil in the coming weeks. I still like the potential for oil longs, right? I'm not going balls to the wall, full account long on this, to keep in mind. And today in news, we have consumer confidence, Richmond, Fed manufacturing, Fed Goolsby, and Fed Waller speaking all at about 10 a.m. So massive, massive news cluster into about 10 a.m. in about hours time. Fed's Bowman also is going to be on the wire today at 10:45. Then we have money supply. We have the results of the 55 billion 7-year note auction, which could be interesting. And then to end the day, we have Fed's bar speaking right into the end of the day pretty much. So a plethora of Fed speakers, 4 if I'm not mistaken, to cluster throughout the day. This day could be a little more filled with volatility as news kind of clusters all around. Now, let's take a look at the S&P 500 futures and what we got going on. There was some sell pressure yesterday, into the earlier portion of the session that led into the afternoon as well. Overnight, we can see that sell pressure continues, and I am looking for some of this downside to kind of materialize a little more. And it's very, very important for this downside to materialize on a day like today after yesterday's larger sell wave. There were a lot of sellers that were coming into the market yesterday, so it's a pretty make or break for these sellers. Otherwise, we can whipsaw this back up very, very viciously. So I do want to see what the sellers have in them. Some aggressive levels are going to be 45, 54 to 57 to see if that sell side does open up a little more to the downside, targeting these lower 40s. The acceptance under 40, higher 30s accepts into a distribution block to the downside, which could open up a pretty aggressive sell that could lead into another potentially 100 points to the downside. So as I look at this, sellers, they really, really got to take control after what had happened over the past few sessions, with sellers coming into these tops into those high 60s and low 70s. So I want to see if that can materialize today and we can get that press on the S&P 500. So I'm going to keep that in mind. I'm looking at, so Matt had, I guess, a statement and a question, took some CSO. I don't even know what CSO is. Wait, is that leverage on oil? But yeah, I'm looking for some oil upside realistically over the next. I have a more medium term view on oil realistically. Consumer data to drag down Dow Jones and Nasdaq. I don't necessarily know how that consumer data plays into it. Realistically, consumer confidence is more of a burst of a report suggesting that it has initial movement, but I don't think it plays out for too long. I think that just general selling over the last few days is, if there's going to be any material selling, it should happen today realistically. That's just my view on how the order flow has been placing itself over the last few sessions here on the market. Yeah. Those are my thoughts. To wrap this up, we're going to be opening up our live trading room. Don't forget, we still have our Black Friday, Cyber Monday deal going into the end of this week, where you can check out TradePro Academy for the first month at $49. Before we get into our live psychology course that starts